Hi, this is Jay Rosenberg of Arrival Capital Management with a fourth quarter 2009 investment update. Today is the day before Thanksgiving, and investors actually have a great deal to be thankful for. After a terrible 2008 and a rocky start to 2009, financial markets have righted themselves and recovered approximately 60% of the value that they lost from market highs back in 2007. Investors can be thankful that the financial system did not collapse as many feared. Companies continue to be able to pay their employees. People continue to be able to get home loans and mortgages, though not at the level of a few years back. ATM machines kept working. The banking system did not collapse. All of these things were on the table, and all these things led to the panic that drove stock prices down to levels that nobody thought we would see again. In fact, the market declines nearly equaled those of the Great Depression back in the 1930s. So the financial system and financial markets pulled out of the tailspin they were in. But the economy still has a lot of issues. Unemployment is high, the dollar is sinking in value. There remain a lot of imbalances in the world economy. But as it often does, stock markets, financial markets look ahead, and they now are discounting that, in fact, we have seen the worst, that the system did not collapse, and the panic lows of March of this year were indeed fostered by panic. So we recovered somewhat, and I'm happy to say that Arrival Capital clients who kept significant money in the stock market have also seen portfolio values recover. And because I've continued to keep cash levels high, we're now in a position to take advantage of opportunities as both the economy stabilizes and returns to growth, and certain long-term trends continue to play out in the domestic and global economy. What are some of those trends? Well, healthcare for one. The American population, the baby boomers, continue to age and will continue to drive demand for healthcare products. Now, we've been in the middle of a long debate over government-run healthcare insurance, and it's still not clear how that's going to play out. But one way or another, people are going to continue to demand more and more medical products and services, pharmaceuticals, devices, other things that can help both the quality of life and also longevity. And as long as we can figure out how whatever government plan comes out will affect the affordability and the regulation of certain medical services and plans, there is a great deal of money to be made from being involved in that sector. Another important trend that continues, that really was merely interrupted by the financial crisis, is the continuing emergence of developing markets and developing countries like China, Brazil, India, Russia, and many others. These countries are developing in a way that no one really thought possible 20 years ago. And from a very low level, their consumers are demanding more and more goods, their industries are demanding more and more resources to make goods both for their domestic population and for export to the United States. So to capitalize on this, we continue to believe investing in industrials, in materials, in metals, in things that, as well as technology, things that the developing world, particularly China and increasingly Brazil, India, other countries, the raw materials and the products and the services and the industrial services that these countries can use to continue to develop their economies. This will continue and is now picking up pace after the hiccup of the financial crisis had on us. So these are just two trends that continue and that are important things that affect our investing decisions. Another element that we're looking at are special situations. What are some companies that have seen their stock prices reduced over the past couple of years, but have the wherewithal to turn things around, or to develop new products and new services so that they can resume growth and resume being successful businesses. Some of these might be retailers that have fallen on hard times because of the economy, but whose underlying businesses remain strong. Also, technology continues to be an important driver, and although some of the prices are too high for the kind of value investing philosophy that Arrival Capital follows, there are in fact many very affordable technology companies that are developing the right products, particularly in the area of mobile communications, that we continue to look at and think may be a good long-term place to put investor money. So a lot of trends are continuing and can be invested on. There are certain things that the financial crisis has stopped, though. The enormous debt that people were running up and allowing them to consume more than they could afford, I think those days are over. And that also has affected the value of not only real estate and real estate related companies, but also a lot of consumer products, discretionary products, that were being bought with borrowed money. And so that's another important change that has occurred that also has to inform our investing. So there are a lot of things that we continue to look at, that opportunities that we believe we can position clients to take advantage of growth in the developing world, a resumption of growth in the United States, albeit at lower debt levels. We also need to juggle things like the value of the dollar and what that's going to mean for American multinational companies that continue to sell things abroad and are actually making more money because not only is the value of the foreign currency they receive going up, but also the absolute price that foreign countries are paying for our products is going down because, again, the dollar has been going down. How long that lasts is unclear, but certainly a lot of the big dividend-paying multinational companies have been not only sound investments over the last couple of years through all the turmoil, but continue to look like good value-based places to put investor money. So there are a lot of exciting opportunities out there, and I hope that we can continue to make the right decisions for investors and for clients to not only keep their wealth stable and secure, but also to grow it, to take advantage of a changing world, and to take advantage of it and take advantage of opportunities. So with that said, I want to wish everyone, friends, clients, acquaintances, a very happy Thanksgiving, and I look forward to speaking to you soon. Thank you.